Sanjeev Bhatia, the CFO at PC Jewellers, joins us on the show right now. Sanjeev, hi, morning. As per the World Gold Council, there's been a huge spike in demand for gold jewelry in the first quarter, up almost 41%. Your top line, however, did underperform that demand and even your peers. What was the reason behind the underperformance, irrespective of the industry by and large doing pretty okay?
I really don't know why, because we grew by nearly 30% on quarter-to-quarter basis. So I feel that was a pretty good performance, and it was not only a top-line growth but also bottom-line growth. So I really can't comment on whether we have underperformed or overperformed. That is for the markets and the public to judge.
What was the GST impact in your numbers, and how much of the GST impact will get normalized in coming quarters? And the reason I'm asking you this question is because when we spoke to Titan, your peer here, Mr. Bhatt was very open about admitting that the jewelry sales were strong because of the GST impact.
For us, the jewelry sales were strong, but basically in the last 1 week only, we didn't see a run up total like the Titan did. So for us, it was not of a very significant affair. So, but last 1 week before the GST was strong, yes. But I'm sure that we'll be able to continue the performance in the coming quarters as well.
Sanjeev, could you quantify what has been your same-store sales growth in the quarter previously, and what is it that you expect going forward?
In the Q1, our same-store sale was growth was nearly 15%, and going forward also we are confident that we should be able to maintain this trend. Though we cannot exactly pinpoint exact figure because this is retail, this is not something input-output matrix, but we are confident that we should be able to maintain this growth rate in the coming quarters as well.
There are two ways to look at jewelry business. One, demand dominated, festival, marriage. Second, historically Indian women have also converted the saving into jewelry because for them they call it the Stridhan or the safety. Are you getting a sense that now the demand for jewelry is only limited to actual consumers? Nobody is buying jewelry because they find safety and security in jewelry?
So jewelry was always an actual consumption item. No one buys jewelry because you want to invest some of your, if you want to invest your savings or this thing, then you will buy pure gold. Why you should pay a 20% upfront and markup charges on buying something? So jewelry is something which you actually like, you want to wear, you are actually using that item, but it is also as a store of value. So jewelry along with time doesn't deteriorate or goes down in value or just has an expiry date or anything like that. So jewelry has a combination of both, but it is not an investment product, but it also has a store of value. So you don't really invest in jewelry, but you buy jewelry when you want to wear it and actually use it. So Indian women have always been buying jewelry for actual consumption, though it always also has a security aspect because it doesn't deteriorate with time. At any point of time it can be traded, exchanged, or it can be sold back. So those are the characteristics. But if someone wants to invest in gold or any such physical asset, I'll use the term physical asset, then they will buy pure gold or gold bar or something like that. Why they should invest in jewelry when you have to pay additional markup of 20, 25, whatever.
Let's talk about your store expansion plans as well, because you have 78 so far. If you could tell us how many more stores is it that you're looking to add in the next few quarters?
We are working hard to cross the figure of 100 by this fiscal end. So the number can vary from quarter to quarter, but our overall target is to cross the 100 mark by March, end of March 18. So the month to month figure or quarter to quarter figure can change, but the year end target is 100.
Typically when you start a store, how much, what is the rollout time, and when do you think the store starts contributing?
See, we basically don't purchase a property, we take it on lease and then we convert it into a store as per our requirement and dimensions. And a store starts break even, first the store break evens. So break even time of every store differs from location to location. If we open in an area where we are already present, then the store break even, that is cash break even, in less than a year. However, when we, or even 6 to 7 months, however, when we open a store where we are not present, where our presence is new and we have to establish our market point, then the stores take 14 months or even 12. So it can vary for, but the thumb rule is about 1.5 years and about 3/4 of a year. And then the store matures after 2.5 to 3 years when it starts paying you back.
You've been making efforts to enter tier 2 as well as tier 3 markets as well to capture more of the unorganized market share. Tell us, what is the strategy in, say, the next 1 year from now?
Yes. See, even today, if you just drive down or drive out of a major city and just go in the interiors, so you will see branded garments, you will see mobiles, electronics, you will even see branded shoes. But looking or finding a branded jewelry store is still a very rare sight. So that's why even today in India, the jewelry market is considered to be 70% unorganized. That is, which is not in the stores are in the small mom and pop family run jewelers. So this gives a huge scope for people like us to go and expand and put up our stores in locations where there is no presence of an organized player yet. And for jewelry, a physical presence is very, very necessary, because people would come, touch, feel, actually have a look at the product, only then they will buy. So if anyone, is not us, but any jewelry company wants to have a top line growth and more expansion, revenue growth, then physical expansion is a must. Cities are now getting saturated, and these are the locations where there is the virgin territory and where is the maximum scope of gaining market share. So tier 2, tier 1, tier 3, where the demand for jewelry is always there, but there is no option for people to go to a branded player.
Okay. All right, sir, appreciate your time. Thank you for joining us, and thank you for your valuable inputs. That was the management of PC Jeweler, really describing, how things are stacked up. Sanjeev Bhatia, CFO of PC Jeweler.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.